Hello viewers, welcome to my channel. I'm Hashim. Now I'm going to start the next head of income, that is capital gain. So last videos I have uploaded the problems on income from house property. Another simple head to be easily understood is capital gain. Then we'll start income from business or profession and income from salary. Now this head is also a small head, few provisions are there, and in examination very often a question will be asked on capital gain. So before starting the problems, you must know what is capital gain, what is capital asset, what is the nature of capital asset, when we can say capital asset is transferred, what are the special mode of transfer, and all these, and acquisition and indexed cost of acquisition. All these things you must know before solving the problem. And in examination they may ask the theory question, what is long-term capital gain, what is short-term capital gain, what is capital asset, what is indexed cost of acquisition. All these terms I am going to explain in the first three videos. First three videos are completely theory. So if you don't watch these first three, you will find a difficulty in understanding the problems. So in this video, I am going to explain you what do you mean by capital gain, what is capital asset, and what is deemed to be a capital asset. And then in the next video, I am going to explain you about the nature of capital asset. What will happen when money is received and forfeited? These things I am going to explain in the next video. What is the transfer of capital asset? In the second video. In the third video, I'm going to explain you about cost of acquisition, indexed cost of acquisition, and what is when the asset is called a deemed capital asset. All these things I'm going to explain. Now, in this video, first of all, what do you mean by capital gain? Any profit or gains arising from the transfer of capital asset affected during the previous year, related chargeable to tax under the head capital gain. So during the current previous year, if an SSC has transferred a capital asset and gain arised from that transfer of capital asset, that is called capital gain. Simple example I'll give you. A person is having house property. So actually it's a capital asset because when he purchased the house property, he has purchased not for sale purpose, for the purpose of using its own residential house or letting it on hire, on rent. So if the house property is sold during the current previous year and gain arised on the sale, then it is called capital gain. Another example, if a person has purchased the gold some 10 years back or 20 years back. Now during the current previous year, the SSC has sold the gold and earned some profit. So profit on sale of gold is a capital gain. So these two examples I have given for capital gain. The capital gain are classified into two categories, LTCG and STCG. Long-term capital gain and short-term capital gain. In this video and in the coming video, I am going to explain you elaborately regarding this, what is long-term and what is short-term capital gain. Long-term capital gain is taxed at a flat rate of 20%. This point beforehand you must remember. There are many, exceptions to this and differences are there. But normally the long-term capital gain is taxed at a flat rate of 20% plus surcharge if any. If the total income exceeds 50 lakh rupees, then surcharge is payable at different rates are there. That means over 50 lakh. If a person's income is exactly 50 lakh, no surcharge. Up to 50 lakh, no surcharge. Over 50 lakh, surcharge is there. So if any surcharge is there, then add up surcharge. And also health and education cess, 4%. Compulsory we have to add. Then STCG is included in the total income along with other heads of income and is taxed at slab system. When the short-term capital is gain, there is no separate rate of tax. The short-term capital gain will be included along with other incomes and taxed at slab rates. Then essential conditions to be satisfied by an SSC to treat an income as capital gain. So Income Tax Act has given elaborate provisions regarding when to put the tax as a capital gain tax. That means the SSC has to identify that is it an income from salary or house property or business or capital gain or other sources. So when an assessee should treat the income as capital gain, some essential conditions are there. The first, assessee is holding a capital asset. If there is a capital asset, then only there is a capital gain. If there is no capital asset, no capital gain. First condition. So what is capital asset? In the next video I am going to explain in detail. During the previous year, relevant to current assessment year, the assessee has transferred the capital asset. Only holding the capital asset does not attract tax. When the assessee has transferred the capital asset during the previous year, then only there is a tax liability on capital gain. There must be a profit or loss on transferring the capital asset. There should be some profit or loss. If there is profit, it is income from capital gain. If there is loss, there is a loss on capital gain. So last one, such capital gain is not exempted under section 54. So in the coming videos, I am going to explain you what is this section 54. So if an income comes under section 54, the income is not taxable. So apart from this, so many provisions I am going to explain in this video. Remember, there is no difference in the provision of income tax regarding capital gain for the last assessment year and this assessment year. 23-24 and 22-23, the same provisions are there. So on the board, if it is written as assessment year 22-23, just ignore, because same provisions are applicable for 23-24 regarding this capital gain. So in this video, I am going to explain you the theory regarding what is capital gain, what are capital assets, what are the different types of capital assets, and what are the deemed to be capital asset. These are the basic things which every student must know before going to start the problems, because the problems are based on the theory, the concepts. So then only you can be able to attempt the problem. So my suggestion to you, watch all the theory videos first, take it seriously, then only you can enjoy working out the problems. So before starting the explanation of this capital gain, take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. Now, capital gains. Any gain arising on the transfer of capital asset during the previous year relevant to the current assessment year. So any gain arising on the transfer of capital asset is called capital gain. Example, a house property was sold. Some shares are sold. These are the examples of capital gain. So here, any profits or gain arising from the transfer of capital asset affected in the previous year relevant to the current assessment year will be charged under the head capital gain and shall be deemed of the income in the previous year in which the transfer took place. Current assessment year is 22-23. The previous year is 21-22. So during the previous year 21-22, if an assessee has transferred a capital asset or sold a capital asset and the gain is arising, that is called capital gain. So capital gains are classified into two categories: long-term capital gain LTCG and short-term capital gain STCG. So briefly I'll explain you. These are the provisions of Income Tax Act. The tax liability will be different for LTCG and STCG. For long-term capital gain, normally there's a flat rate of tax of 20%. That means separately we have to calculate the tax on LTCG at 20% flat rate plus surcharge and plus health and education cess at the rate of 4%. If surcharge is applicable, then only surcharge will be there. But compulsorily, health and education cess 4% will be applied. Short-term capital gain is included along with other heads of income and taxed at slab rates along with other incomes. Example, a person is having income from salary, income from house property, income from business or profession. So we club all the incomes. Along with that, we include STCG, short-term capital gain. So it is taxed along with other incomes at slab rates. That point you have to remember now. Now, following are the essential conditions to be satisfied by an assessee to charge an income under the head capital gain. So when an income is chargeable under the head capital gain, some conditions are given. If the assessee satisfies these conditions, then only the gain arising is taxable under the head capital gain. The first is assessee is holding a capital asset. If the assessee is the owner of a capital asset and he transferred, then only capital gain. If he is not the owner, if he is not holding the capital asset, no tax under capital gain. Secondly, during the previous year, relevant to the current assessment year, the assessee has transferred the capital asset. If only holding the capital asset, there is no capital gain. If the assessee has transferred the capital asset during the previous year, relevant to the current assessment year, then only it will be taxable under that capital gain. Thirdly, there must be a profit or loss arising on the transfer of capital asset. If there is no profit, no loss, not taxable. Only if there is a profit on transfer of the capital asset, it is taxable. Lastly, such capital gain is not exempted under section 54. In the coming videos, I'll explain you what are there under sections 54. So if it is exempted under section 54, then there is no tax. If it is not exempted under section 54, it is tax. There will be tax. So these are the 4 conditions to be satisfied to make an income taxable under the head capital gain. Now what are capital asset? Capital asset means any property, includes any property of any kind, whether it is movable or immovable or tangible or intangible or fixed or circulating. However, the following. First of all, capital assets for taxation purpose can be classified into 2 categories: tangible assets and intangible assets. Under tangible assets, again we have non-financial tangible assets and financial tangible assets. Remember, this is not the only theory. The problems are based on this provision also. The tax rate is different for different purposes. So tangible assets, non-financial tangible and financial tangible assets. For intangible, we have self-generated intangible asset and assets purchased for a price. Any intangible asset which is purchased for a price. Now, tangible non-financial asset. Which are the assets which are called tangible non-financial assets? The examples are land, building, ornaments, jewelry, etc. These are the examples of tangible non-financial assets. Now, tangible financial assets are equity shares, debentures, bonds, units of mutual funds. These are few examples of financial tangible assets. So, non-financial, land, building or ordinary ornaments, jewelry, etc. For financial, equity shares, debentures, bonds, units of mutual fund, etc. Now, intangible. Intangible means the assets which we cannot see, but really it exists. So, which are the intangible assets? Goodwill of a business or profession. We know goodwill is the reputation of a business. The goodwill is created due to the good name of the business. When a business is having a goodwill, good name, its earning capacity will be more. So goodwill is also an asset. So intangible asset. Then right to manufacture a product. The company got, the business assessee got a right to manufacture a product. That is also an intangible. Then right to carry on any business. A particular assessee has a right to carry on the business. So this right is called intangible asset. Tenancy right, then trademark, brand name, etc. These are the examples of intangible assets, right? Now, capital asset meaning it includes any type of property, whether fixed or circulating or tangible or intangible or movable or immovable. But however, the following are not to be considered as capital asset. This is very important. In the coming problem, you must be in a position to decide whether it is a capital asset or not a capital asset. So meaning of capital asset, any type of property, whether it is fixed or circulating, movable or immovable, tangible or intangible. But the following assets are not capital assets, not taxable. What are the exceptions? Personal effects of the SSC, that is articles which are used for personal purpose by the SSC or his family members. So SSC will use a number of personal effects, the personal items which are used by the SSC or their family members. Example, television, refrigerator, similarly scooter, then car. These are the items which are called personal effects. If any gain arising on the transfer of these personal assets, it is not taxable because assets are not capital assets. Example, SSC is having a TV. It is not a capital asset. SSC is having a refrigerator, not a capital asset. Motor car, not a capital asset. That point you have to remember, not taxable. Secondly, note, the personal effect does not include archaeological collection. Income tax has made some provisions that archaeological collections or paintings or drawings or sculptures, these are, even if it is personal effects, but Income Tax Act will treat it as a capital asset. So if a person transfers archaeological instruments or paintings or drawings or sculpture, it is a taxable capital asset. That point you have to remember. And an exception to the above rule is jewelry. Jewelry, even if it is used for personal purpose, Income Tax Act says jewelry is a capital asset. The gain arising on transfer of personal jewelry, that is also a taxable capital gain. Next is the house property in which the SSC lives is considered as capital asset. The house property, even if it is used for personal purpose, Income Tax Act says it is a capital asset, and gain arising on the transfer of house, that is also taxable. These are the exceptions. Now, other items which are not taxable are agricultural land situated in rural area. So, Income Tax Act says if a person is having agricultural land in a rural area and during the previous year he has transferred the agricultural land, the gain is not taxable because agricultural land in rural area itself is not a capital asset. Agricultural land in urban area is a capital asset, and gain arising on the transfer of agricultural land in urban area is a taxable capital gain. That point you have to remember. Next one, any item such as stock in trade, that is raw material kept for manufacturing. So if any raw material is kept for manufacturing and that raw material is sold, then that gain is not taxable. That is not a capital asset at all. Then 7% gold bonds 1980, National Defense Gold Bond 1980 issued by the central government, and gold deposit bonds issued under Gold Deposit Scheme 1999, Special Bearer Bond 1991. These are the assets. These are the assets which are not called capital asset, and any gain arising on these assets are not taxable. Now, deemed to be capital asset. In some cases, in reality, it is not an asset, not a capital asset. But Income Tax Act will treat those assets as capital asset, and any gain arising on those assets will be taxable. That's why it is called deemed to be capital asset, just like capital asset. Example, share of a partner in a partnership firm. The share of a partner in a partnership firm is a capital asset, deemed to be capital asset. Next, right to subscribe for shares. Right shares they are called. A company will issue the new shares to the existing shareholders. If you are an existing shareholder already holding some shares, then the company may offer to you some new shares. If you purchase those rights, or you can transfer the rights to another person. So this right to transfer the shares is a deemed to be capital asset. Next, leasehold rights or tenancy right. If a person has got the right on lease and he has transferred the right of the lease, that is also a capital asset. Then foreign currency, mining rights, industrial licenses acquired for a price. These are called deemed asset. In examination, you may get a theory question also. What do you mean by capital asset? What are the different types of capital assets, like tangible, intangible, then financial, non-financial, all these things you have to write. Apart from that, which are the assets which are not to be treated as capital asset, right? And deemed asset. So inshallah we'll continue our discussion, more discussion on capital gain in the next video.